Yeah, good morning, Becky. Shifting policy views as a result of unexpected economic data. Well, it's opened the door for the Federal Reserve to potentially announce in September a decision to taper its asset purchases and begin tapering a month or so after. Interviews with officials along with their public comments show growing support for a faster taper timeline than markets had expected just a month ago. Those changing views follow the strong jobs data the past 2 months, along with higher inflation readings. Here's a new potential taper timeline. Looks likely to look like this. A taper announcement in September. Last month, market consensus had been centered around November or December. The taper beginning in October or November, depending on how much advance notice the Fed wants to give markets. Last month, the consensus was December or January for the actual beginning. And a taper that lasts 8 to 10 months, depending upon how aggressive the Fed wants to be in reducing its asset purchase and, of course, clearing the way for potential rate hikes far down the road. No decision's been made yet, pending an actual meeting and vote. The committee could delay the announcement until November, especially if August jobs data is weak, the Delta variant sparks new round of economic lockdowns, and inflation readings ease off. But Fed Chair Jay Powell recently said he did not foresee a large impact from Delta and that the Fed should take seriously the risk of higher inflation. At the same time, Powell also said he thought the inflation spike would prove transitory, and the Fed was, quote, some way away from the substantial further progress needed to taper. But hold on, because those comments came before the July jobs report beat expectations and producer prices came in at double the street consensus. Focus now turns to Powell's Jackson Hole speech, where he could well set the table for that September announcement. Becky?
Been the huge question, Steve, because I think as recently as last week, people were not thinking he'd be speaking about this at Jackson Hole. If this is already out and this is kind of the signaling just a week and a half or so before Jackson Hole, it seems like it would be hard to avoid it there, to avoid this conversation. And we should remind people, you're talking about $80 billion in treasuries that the Fed's purchasing every month and $40 billion in mortgage-backed securities. It's been the mortgage-backed securities where most people thought maybe they would pull back sooner. Those purchases are trying to start some sort of demand, and there's no demand needed when it comes to the housing market.
I think that's right. There's more support on the Fed for perhaps bringing down the mortgage backs quicker than the treasuries. I don't necessarily have any information on how that's going to pan out. We are, by the way, going to talk to Eric Rosengren, Boston Fed president, later this afternoon around 4:30, and we can ask him that question. Because now you're right in the sense that if the cat's out of the bag, if the Fed is going to announce this taper in September, well, then there's three questions. How do they do it? When do they actually start it? And the timetable over which it takes place. An 8-month taper is probably on the more aggressive side. A 10-month taper would be on the less aggressive side.
OK, so let's talk about where the Fed has been to this point. The reason maybe they've been reluctant to start any sort of talk about pulling back, about tapering, and maybe that all ties back to 2013. But the taper tantrum that we saw back then, that was when Bernanke said, OK, maybe it's time to start pulling back some of this. And the market really pitched a fit. It feels like it's a very different scenario this time around.
I think that's right. And I think the Fed knows that, Becky. I think if you look at the idea that we've been talking about taper for, 3 months now as something that the Fed is talking about. The Fed has acknowledged talking about it at June and July meetings. Powell has said they're going to talk about it some more. The talk of the taper is out there. You can't avoid that. And the market has already reacted with, I guess, some equanimity is the best way to put it. When I look at probabilities, what's fascinating here, Becky, is that the Fed wants one thing. It wants the market to divorce the idea of tapering and rate hikes, that those are two separate things on two separate tracks. And it looks like that's the way the market's reacted. Since the taper talk's been out, the market's been relatively up there. Bonds have been volatile, but yields remain relatively low. So I think part of the reason why we're getting more signals that the September announcement is possible is the Fed feels like it's overcome what was really the issue number one with the taper, was avoiding the tantrum. That looks to be off the table, maybe at least for now.